Mortgage rate locks rose 68%. This is after the recent rate cuts from the Fed. And Redfin's Homebuyer Demand Index shot up to its highest amount since May. Many house hunters have been waiting for the Fed to cut rates before they jump into the market.
I'm Kiwi of the coast, the agent with the most.
Helping you maximize and sell the value of your coastal home. Right, let's dive in and see what these rate locks are all about. On September 23rd, home buyers locked in 70% more loans than they had a month earlier. And this is a huge bump in the demand curve for mortgages since the rate cut. Now, it's worth noting, of course, that this rise in rate locks may overstate the demand, because what's really been happening is there's a whole bunch of buyers that have been sitting on the sidelines waiting for this rate cut, so now they're jumping in, and that's why potentially we're seeing that huge spike in the number of rate locks. Still, there's other indicators that the mortgage market is improving. And one of those is that there's a 10% increase month over month in the number of mortgage applications. Additionally, Redfin's Homebuyer Index has shot up, indicated by more requests for home tours and other Redfin services. Well, that's the highest level since May. It's also notable that the Demand Index rose 1%. This is the first time it's moved and gone up in over a year. Now, looking at the data, it says that pending US home sales fell 3.1% during that 4 weeks ending September 22nd. That's the smallest decline in 5 weeks, and the uptick in increases in mortgage locks and mortgage applications is indicating that we're likely to see an uptick in sales over the next few weeks. Home buyers are off the sidelines, and this is because of the historic rate cut move that the Fed just made a couple of weeks ago. Mortgage rates and housing costs had been declining in the weeks prior to the Fed announcing its big interest rate cut. But before this week, there hadn't been any real meaningful uptick in the demand, but now we're starting to see it. House hunters, they were waiting on the sidelines until they knew that that rate cut was real. And even though they were seeing mortgage rates come down prior to the rate cut, they were still suspicious. So now, with that rate cut real, they're jumping in. Housing affordability, that's a huge factor in bringing the buyers back into the marketplace. The median monthly housing payment, that's actually down 4.4% year over year. And that's the biggest decline in more than 4 years. Mortgage payments have dropped to their lowest level since January. But in spite of this, we're still seeing an uptick in the prices of homes on the market, and that's an inventory issue. There are some metro areas like San Jose, Los Angeles, and so on that have seen some price settling. That's good news for the buyers in those areas. So is supply up or is it heading up? Well, the mortgage rate decline has certainly brought on some fresh inventory, as those sellers out there potentially realizing that now's the time to get their home on the market, because those buyers have the ability to make the payments and purchase at the current prices. If they wait, that could change. If we look at the report, new listings of homes for sale are up 7.6% year over year, the biggest increase of new listings since June, with sellers realizing, as I just mentioned, it's unlikely mortgage rates will drop back to 3 or 4 range anytime soon. It's worth noting that another reason for the uptick is that inventory is traditionally lower at this time of year. The real estate market, it is constantly changing. Click on the video that's on your screen right now so I can keep you up to date with mortgage rates, inventory, all those factors affecting you in the real estate market. We'll see you on the next one. Vroom.